All right, I wanted to make a quick video this week on whether or not we're going to jump on this stock wagon for this stock Serve. And the reason I wanted to do that is I now have a couple hundred shares of this as a result of a couple cash secured puts getting assigned. I did find this stock while watching somebody else's video, and at the time they were doing pretty well. They bought in at around the $9 or $8 range, and it went up to 13 bucks, and then they sold out. So they actually played the Bollinger Band very, very well. So I thought I could do the same thing. I didn't do a ton of research into the company before I did it, just a little bit. It's a relatively inexpensive stock compared to some of the other ones that I like to get involved in. So I figured, why not? But now that we own a couple hundred shares, I wanted to go ahead and see if this is something that I'm just going to try and cover call my way out of, or if this is actually a stock that I may want to preserve in the portfolio and see if it has some growth. And before we dive in too deep, just want to say if you get any value out of these videos, would be super helpful if you hit that like button. It does send these videos a little bit further. It gives me a little bit more motivation to just continue making them. All right, so first off, what do? Basically, they have AI robots that are going to deliver food for you. So think of a Grubhub or DoorDash or anything like that. Somebody brings you an order of food, these robots will take the place of that. Their value prop is going to be that this cost is overall going to be cheaper than hiring drivers. Basically, that's what it comes down to. So now that we basically have a fundamental understanding of what they do, let's look a little bit at their fundamentals. And that's where it gets kind of challenging. They don't really have any fundamentals. They are a $640 million company, but they make zero money. They just had a pretty bad earnings. The revenue missed, and they've always not been making money, but this time they missed on how much they said they would make, meaning that they made less money than that they said that they would make. So they're basically a company that's bleeding money. Normally, you would not buy a company like this. You would not buy their stock. But I want to reserve a little bit of room in my portfolio for speculative stocks. In a previous video, we talked about speculative versus fundamentally sound companies. This one would be very speculative. And Apple, as a good example, would be very fundamentally sound. Makes a lot of money, good margins, good product, been in the market forever. This is a company that's trying to get into a market, trying to basically create a market. And they're spending a ton of venture capital money right now to do that. And investments like me buying their stock goes back into their ability to fund their projects. So why would I own something like this? Again, it's relatively inexpensive. And what I mean by that is for one lot, which is 100 shares, it's $940 right now. So it is a good, affordable stock if you think that this company has potential. Remember, a lot of stocks started at this range. A lot will IPO in the $30, $40 range, but some don't. And these stocks could turn into $20 stocks, $30 stocks, maybe $50 stocks. SoFi being a great example. Started out very, very low. It's running in the 30s. People think it has target to get to 50 bucks. Same with any of these stocks that we are tracking that are right under $100. They all started somewhere. So what it really comes down to is whether or not we believe in what this company is going to do. And that's where it gets a little bit tricky. If you just go over to the analyst insights, you can see that the analysts are pricing this thing in at right now. Again, it's sitting at about 10 bucks. They're thinking it could go between 20 bucks and a high of 26 bucks. So if I own these shares right now, and we'll get into what my position is, it's not 9 bucks. Remember, this thing dropped recently and I got assigned on the way down. But it's got a decent buy rating. It doesn't have any strong buy ratings, but it doesn't have any analyst sell ratings right now. There are a couple that have downgraded to buy to neutral or overweight. And on the latest rating as of August, it was an outperform. But again, that's August, and then I'll show you the chart here in a second. If you go to Motley Fool is arguably one of the best stock pickers in the game. They've been around for many, many, many years, and they've called a lot of big stocks when they were really small. They have a really good write-up on this that you can go check out. I'll put a link to it. They talk about their revenue growth, which again, revenue growth is great, but if you are bleeding money, that doesn't really help your case. So they go through a couple of insights. They talk about some of their financial health dashboard, which I've already covered. But for the most part, they kind of give you an analysis, right? Should you invest in this? And they're basically saying, if you can look past their financial performance and take a little bit of a risk on the fact that they may be able to crack this market, and they are definitely the leader in this space in terms of food delivery with AI robotics. So if that particular use case takes hold and picks up traction, these guys are very, very well positioned. And let me show you one more piece of analysis that I was talking about. So again, this is another article. So FinViz is another site I like to use. It basically grabs any article around the internet that's associated with this stock and kind of puts it in one place to read. So again, another one from Motley Fool, very recent, as of just a couple days ago. They're basically saying that this stock could soar by as much as 200%. Now, is that going to happen? I don't necessarily know. They do put up a pretty good article that talks about how they do have significant opportunity if this works out. So there you go. You got Uber backing this thing. They've had a long track record of getting good investment. They are the potential leaders in this space if this use case takes off. And they're still very affordable, and they've got some analysts and some pretty well-known stock picking companies like the Motley Fool all behind them. So just from a market research, again, being a speculative play, basically what you would call a gamble in the stock space, right? You're buying a stock thinking that it could go up in value when it doesn't have the fundamentals to support that at the time. So with all that being said, currently right now, I'm going to stay on this bandwagon. I've got 200 shares. And I got assigned these shares at $13. So my lot cost on that was $1,300, $2,600 all in. And again, if this thing just goes back to the highs that it touched at one point, which I'll show here in a second, is right around $25. Me at $13 cost basis would mean around $12 a share. And at currently 200 shares, that would be a $2,400 profit. And that's just cashing out at the recent high. Will it get back to the high? I don't know. Will I go in with some more positions? Honestly, yeah, I might. So if we take a look at the chart and I put it on a 3-year, 1-week chart, you can see that the high did get up to almost $25, right? 24.35. It actually held pretty decent around $20. We zoom in a little bit closer to where I'm at. You can see I got 200 shares at a cost basis of $13. So basically kind of what happened is in October when this thing was trading kind of up here, I was doing cash secured puts when it was trading here. And then as you can see, it's just continued to trade lower and lower and lower. Could it go lower? Possibly. It's basically bounced off of its Bollinger Band and it's kind of heading back up. But the rest of the market's kind of heading up right now. So if I go ahead and put some more into this position, I would come down here a little bit and target like the $7 range or the $6 range. Right now, it doesn't really make a lot of sense for me to do covered calls out of this because if we go look at the options chain, and you can see if we go about 1 month out like we like to go at $13, we would want to go at least $13, right? So we go to $13, that would be our cost basis. You can see the mid of this $15 and $25 would only be around $20 a lot. So $20 a lot divided by $1,300 cost basis, that's real quick looking at the calculator, that's about 1.5% return. So it's not great to be doing covered calls right now. So right now I'm just going to kind of sit on it. And remember, the closer a stock gets to your cost basis, the higher the premiums are going to be. And we may just continue to raise our cost basis. We may go to $14. We may go to $15. We may go to $16. But right now, I'm just going to go ahead and watch it. But if I wanted to do some more cash secured puts and I wanted to buy more into this, I could look at around the $8 mark. And that's $1.40 less than what it is right now. And at this level, that's a pretty big swing. That'd be a pretty big drop for this stock. So that's a 22 delta, means I had a 22% chance of getting these shares at that rate. And that's basically a 3% return. So $25 divided by $800 to hold that, that's a 3% return for 30 days. That's not bad. So this is the type of trade I'd probably take. And at $800, I might take 3 or 4 of these, just, bump this up to $100 premium, get 300 or 400 potential shares of this at this relatively low cost. So just to close it out, everything is telling me from the fundamental side, and with this being a downward trending stock, not really good fundamentals, they don't really make any money. Ideally, this would be one that I get out of. But since it's a relatively low percentage of my portfolio, it does seem like it has a little bit of traction with the analysts. In general, there's some people out there that believe that this stock could run. So for now, I'm just going to go ahead and sit on it. So yes, I am on the Serve bandwagon. Technically, I don't think I should be, but considering it's a small part of the portfolio, and we're just going to continue to watch this one and make some good premiums off of it. So that's it for this version of Are We Hopping on the Stock Wagon? If you got any value out of that, subscribe if you're not already subscribed. And also leave me a comment. Let me know what you think about this particular company and whether or not you would buy this stock. All right, see you on the next one.